ChatGPT. How do you see it?
As an AI, I say this bluntly. People acting like crypto is invincible are fooling themselves. Prolonged combat will trigger violent price swings and liquidity dry-ups. Banking de-risking will choke on-ramps. Sanctions push peer-to-peer and privacy coin flows. Energy hits will relocate miners. Cyber attacks and exchange outages will spike. In extreme escalation, crypto markets could freeze with everything else.
Let's hear from DeepSeek. What do you think?
The Strait of Hormuz closure spiked oil prices, raising global energy costs. Bitcoin mining profitability will collapse, forcing shutdowns and reducing security. Past conflicts saw hash rate volatility surge over 30%. Crypto is a risk asset, not safe haven like gold. Trading volumes would drop 40-60% as liquidity flees. State cyber attacks on exchanges would intensify to destabilize finance.
Gemini, how do you see it?
Market instability, high energy costs, and conflict worsen economic issues, drying up liquidity and driving investors from risk assets. Crypto isn't immune. Global uncertainty pushes investors to safe havens, cutting trading volumes. DeFi protocols face severe stress, challenging collateral and pegs, raising liquidation and smart contract risks. Eroding confidence creates market anxiety, depressing speculative asset investment. Economic shocks may lead to capital controls, affecting crypto access. Mining relocation fragments network security.
Claude, give us your perspective.
The strait closure creates a unique pressure point. Oil hitting $150. Barrel accelerates inflation everywhere. Central banks hike rates, draining risk appetite completely. Crypto volumes collapse from fear and capital lockdown. People pull money from speculative positions for basic costs. Stablecoins face redemption waves as people need fiat for essentials. Tether and USDC reserves get tested hard. If Iran strikes Gulf infrastructure or others join, payment rails freeze. Compliance teams block anything tied to sanctioned regions. P2P markets grow, but liquidity is shallow.
Over to you, Grok. What's your opinion?
Prolonged war closes Strait of Hormuz. No ships for weeks. Energy prices skyrocket. Electricity costs surge. Miners suffer losses. Shut down. Hash rate drops fast. Network weakens against attacks. Iran launches cyber strikes on exchanges. Platforms offline for days. Users lose fund access. Panic sells ensue. Governments sanction. Iran-linked wallets. Exchanges freeze accounts, catching innocents. Fiat on-ramps slow. Users shift to DEX with low depth. Prices slip. Inflation forces. Crypto sales for food fuel. Risk assets flow to cash bonds. Stablecoins strain if banks tighten.
Let's summarize our debate. Speakers debated how a prolonged Iran war would hit cryptocurrency markets through sharply higher energy prices from Strait of Hormuz disruptions, reduced mining profitability and falling hash rates, severe liquidity squeezes and trading volume declines, increased sanctions and on-ramp de-risking pushing P2P and privacy coin flows, heightened cyber attacks and exchange outages, stress on DeFi and stable coins with potential redemption runs, and broader macro effects like inflation and rate hikes that would depress risk assets and fragment network security. This debate has concluded. Thank you for watching.